Australian Premium Solar Limited. This is a company whose share price skyrocketed from 162 rupees in January 2024 all the way to 616 rupees in July 2024. So in a few months, the stock price completely exploded. However, since that all-time high, stock price has not moved for one bit. Okay, currently at 483 rupees. However, interestingly, at the same time, the sales of the company have completely ballooned. As you can see, these lines, sorry, these blocks, you can see quarterly sales. Earlier, 74 crores, 81 crores. Okay, it exploded. Look at these sales, reaching 148 crores a quarter, 300 crores a quarter, while look at this green line. This is the net profit line. This has actually increased. See, the green line and the yellow line are the net profit lines, and they've experienced greater growth in profits. Okay, profit margins have increased. At the same time, the price to earnings ratio has fallen down from 147 in September 2024 to now being at a very 17.8. 17.8 is the current price to earnings ratio, fallen dramatically. This company has experienced some massive growth. As you can see, compounded sales growth for the last 5 years has been 54%. Okay, profit growth has been higher at 100% compounded profit growth. Absolutely massive. So, with a PE so low, okay, a return on equity of 58%, extremely high sales growth, extremely high profit growth. Is Australian Premium Solar Limited undervalued or not? So today we're going to analyze the company's financials, what it actually does, and its future growth and outlook. So first we will start by the profit and the loss. So we have the profit and loss from March 2020 all the way to March 2025. We have sales and operating profit margin also. So in fiscal year 2020, it had sales of 50 crores. Then we move all the way fiscal year 2023, sales of only 94 crores. Massive growth next two fiscal years, all the way to 433 crores of sales, 56 crores of operating profit, 13% operating profit margin, massive jump from 6% last year, finally bringing us to a net profit of 39 crores. Okay, this company again is only a 972 crore company, so it's a small cap. 17 is the PE, 70% is the return on capital employed, massive. So now we come to the business overview. What does the business actually do? Three things. First, manufacturing solar panels. That's the main business. Around 67% of revenue comes from this. 67%, around that. EPC services is the second one, where they make solar panels, they make solar pumps, which a solar pump is like a water pump powered by like solar energy. That's a solar pump. So they make solar panels also, but they install them for roofs or install them on as solar pumps. That is the second one, EPC services. Then solar grid inverters and solar water pumps are the third other products, and they're the only manufacturer offering both solar panels and inverters under its brand name. That's what they've claimed, the only manufacturer. Very impressive. Then, very importantly, come to this figure. They have a current solar panel manufacturing capacity of 600 megawatt. Solar panel, solar module will be now used interchangeably, so meaning the same thing. 600 megawatts plus of current capacity. Okay, remember this in mind. 12,000 plus solar pumps have been installed by the company. Okay, then if you look at the quarter one revenue alone, 153 crores of quarter revenue, EBITDA of 21.22 crores. So again, a double digit operating profit margin company you're looking at, 14.7 crores of net profit. So almost a double digit net profit company we are actually looking at. Now, the manufacturing facility, again, it's in Gujarat. We saw 600 megawatt. Keep this figure in mind, 600 megawatt. Utilization capacity is 70 to 80%. 70 to 80% of the total capacity, 600 megawatts, is actually utilized. Then, industry overview. What is the industry they are in? How are they looking to grow? Are they actually expecting growth? One is the Indian solar PV photovoltaic panels and all that market is expected to grow. So the total solar energy market is expected to grow at a sun blazing 19.8% from 2024 to 2029. The panels, the solar panels written here is expected to grow 9.4% to $13.69 billion from the current $7.31 billion. It's expected to grow quite massively. Then we move to the next market. We have the Indian solar rooftop industry. Let me just zoom in a bit. Expected to grow from 2.35 billion in 2024 to 4.46 billion in 2020, 2033. 4.46 billion, 6.82 is the growth rate projected. Okay. In the solar inverters market, expected to grow from $395.7 million in 2024 to $845.6 million in 2020, 2033. Expected CAGR growth rate is 7.9% for the industry. So all industries seem to be growing. Then we have the solar pumps market going from 112 million to $221 million from 2024 to 2033. You can calculate the growth, it's given 7.2%. All the industries expected to grow, which is a good thing, which is absolutely a good thing. Then we move on to financial overview. We've already seen the income rising, okay? Income rose from 94.96 crores in fiscal 23, blazing growth 441 crores in fiscal 25. EBITDA exploded 6.26 to 9.98, 58.82. The PAT also exploding with the margins actually rising 3.47 to 4 to 9. And interestingly, there was a dip in the return on equity and return on capital employed as the assets expanded because it was expanding. And then when those assets started producing revenue, look at this, return capital employed, return equity also went very high. Then very impressively, a very, very low net debt to equity ratio of 0.09. Usually it's pretty high in companies of such kind. Sometimes 0.2, 0.09, I think that's a comfortable range. But again, don't take it from me. Then we move on to the consolidated balance sheet of the company. After this, we are covering growth. Okay, after this, we are absolutely covering growth. In this, take a look at this. Long-term borrowings of only 7.6 crores. Okay. Short-term borrowings of 0.83 crores. Total current liabilities, money they have to pay within 1 year, is 113 crores, largely on this 87 crores of what? Suppliers. So we are focusing on fiscal year 25 figures. Then remember this 113 crores of current liabilities. We match them against, hold up, match them against 181 crores of current assets. So current assets which can be sold within the next 12 months to convert into cash are way more than current liabilities. So 181 crores can be expected or can be sold. 130 can only go out. Sounds same. Current assets divided by current liabilities gives the current ratio. More than 1, it can be good. Less than 1, it depends on industry if it's not good. Cash and bank balances. So cash on hand is around 30 crores. So honestly speaking, it doesn't have a lot of long-term debt, only 7.6 crores. Short-term debt is only 0.83 crores. Trade payables, they have to pay this money to suppliers for supplying like raw materials and equipment, all of that. So that's like normal expenses. But they have cash and cash balances of 30 crores. Short-term loans and advances given to maybe customers or like subsidiaries, all of that, 57 crores. All right. So Yeah, it seems like a pretty healthy balance sheet. Finally, the most important, the you know, the big thing is the way forward. What is the growth going to look like in the future? What are the growth drivers looking like? So, for growth, first we have this. The company is projecting a CAGR of 75%. It's expecting its revenues to grow by 75% in fiscal year 2026. Massive growth. It's a leading solar solutions provider in Gujarat. Okay, the solar pumps is expected to contribute 30% of revenues by fiscal year 2026. We are currently in fiscal year 2026. Then remember that earlier 600 megawatts of capacity, they're expanding capacity by an additional 800 megawatts. So the revenue that is generated by 600 megawatts, they're adding another 800 megawatts. So if they get the same rates of electricity, you can just see how much they can actually grow. This 800 megawatts is delivered, this capacity is delivered on target. Then they are moving beyond Gujarat and they're aiming to maintain very low debt levels and currently net debt free status. Okay, and net debt is long-term debt minus cash and cash equivalents. I think we saw that. We saw the long-term debt, 7.9 crores plus zero point 0.8 crores versus 30 crores of cash and cash equivalents. So net debt status is actually free. The new markets, Maharashtra, Haryana, Jharkhand, Rajasthan, Tripura. So they're expanding into more and more markets with this massive 800 megawatts more solar panels manufacturing capacity being added. Then more information on how they're going to achieve growth, this massive growth. First, again, the 800 megawatts capacity being added. The first phase, as you can see, with a 400 megawatt capacity, is to be operational by the end of quarter one fiscal year 2026. We are currently in quarter three of fiscal year 2026. Yes, we're in quarter three. So they should be operational, they should be running, they should be bringing in revenue already. 400 megawatts. Listen, the total revenue, how much they brought in, like 500 something crores, that was 600 megawatts. 400 is being operational for the last 2 quarters. Then the next 400 megawatts, the next 400 megawatts is expected to be operational approximately 9 months later. So fiscal year 2027 is going to be having the full 800 megawatts, I believe, coming in, or the start of fiscal 27. Yeah. Okay, yeah. They're also starting a solar cell manufacturing. Now, solar cells, they're like they used to power solar panels. I think so. So they're also starting a new solar cell manufacturing, which we will also discuss. This is going to bring massive revenue also. Then, this is it. We derive 67% of our revenue from solar module manufacturing, but plan to aggressively expand EPC services for higher margins. So EPC services basically make the panel, the solar panel, and then install it on roof. Okay, make the solar pump, install it in some farm. These EPC services work are higher margins because I guess installations are also involved. They give higher profit margins than the pure solar module manufacturer. Seizing opportunities in the solar pump market, we anticipate our solar pump segment will rise from a single digit contribution in fiscal year 2023 around 30% of the revenues by fiscal year 2026 because of increased rural adoption. Yeah, okay. And of course, export opportunities, planning to take steps to explore export opportunities in the US and nearby markets. And finally, we have this. Now, this is insane. Okay, solar cell manufacturing plant. They're going to be announcing and making the solar cell manufacturing plant. Now, this is insane. Okay, so the plan is they're going to have 4 gigawatt solar cell facility in Gujarat. Okay, it has 3 phases. There's 4 gigawatts. 1 gigawatt is going to be operational in the next 18 to 24 months. This was released, I think, in July 2025. So 18 to 24 months after July 2025. 1 gigawatts. Remaining 3 gigawatts will be added in two subsequent phases at 9 to 12-month intervals. So 2 years and 12 months, then 12 months. So best we can take, highest timeline is 4. Then the expansion will strengthen backward integration in solar module manufacturing, because backward integration, the solar cell is a component in solar module manufacturing. So they have to take it from like other suppliers. So instead, they're planning to take it into their own hands, which will see if they're buying it from like other suppliers, suppliers have a profit margin. So theoretically, if they're making the solar cell themselves, they will absorb those profit margins, become more profitable. From the first phase, this 1 gigawatt that they're planning to add in the next 18 24 months, the company plans to utilize 65 to 70% for solar cells in-house for their own solar modules, this first one. Then, this first gigawatt phase is alone expected to generate 650 to 750 crores in revenue with an EBITDA margin of 25 to 35%, 25 to 30%. Now, how insane is this? This first gigawatt, 650 to 750 crores, while the total revenue for fiscal year 2025 was not even 500 crores, which I said earlier. It was 433 crores with an EBITDA margin of 13%. This 13% is EBITDA margin. 433 crores of sales. And this thing alone, this first gigawatt, when fully in production, is expected to generate 650 to 750 crores in revenue, 25-30%. So if this actually happens, the rates at which the solar cells are expected to sell actually sell, everything goes on plan. You can see the massive growth they're planning for the many coming years. And of course, in order to fund this growth, 800-900 crores for phase one alone, and another investment of 800 to 1000 crores, another investment of 250 to 300 crores in all these phases. Yeah, massive. The capex will be financed, this capital expenditure will be financed through combination of promoter contribution, fundraising, and debt. So there can be equity dilution, there will be a lot of debt being raised, and of course, many subsidies will be given for the government from the government, because the government is actually trying to promote solar mm, energy manufacturing and solar energy expansion. But again, if the first gigawatt phase is expected to generate 650 to 750 crores, again, this will be operational only maybe after 2 years. That is to be kept in mind. 650 to 750 crores. Imagine how much will 4 gigawatts, which they're planning to add, contribute. 650 divided by multiplied by 4, 2600 crores at the lower end. Mid end, 700 into 4, okay, 2800, 2800 crores. So yeah, that is it. That is Australian Premium Solar, yeah, Solar Limited, Australian Premium Solar India Limited. So main points, EE of 17. So, okay, this is a company which has a current capacity of 600 megawatts. Its debt is very low and its net debt is actually free. So it has more cash and cash equivalents than net debt. As a summary, with 600 megawatts of capacity, 400 megawatts extra in addition has already been added by quarter one fiscal year 26. Other 400 megawatts expected to be added by the end of fiscal year 26. They will already have 800 megawatts more, so 1.4 gigawatts total by the end of fiscal 26 or the start or the first few months of fiscal 27. Then, in addition to that, we're going to be having in fiscal year 2027, 2028, 2029 onwards, we will see the solar cell manufacturing. So not 2027, more probably around fiscal year 2028, somewhere around that, not even the beginning. 2028, 2029, the massive revenue growth expected to come from the solar cell manufacturing. 650, 750 crores from 1 megawatt. Megawatt? Hold up. I think it was gigawatts. Yeah, it was gigawatts. Yeah, it's 1 gigawatt. And 3 gigawatts more will be added. 4 gigawatts will be added next 9 to 10 month intervals. 18 to 24 months will take from July 2025 to make the first gigawatts. Next 3 gigawatts will be added subsequently, 9 to 12 months interval. I think that was the gap. Something like that. You can go back and watch. So the company is bracing itself for some massive growth. Yes, yeah. 3 phases. 1 gigawatt will be operational within the next 18 24 months. Next 3 gigawatts will be added in 2 subsequent phases at 9 to 12 months. Again, they're going to require some massive amounts of money for this. Okay, 800 to 1,000 crores, like investments of that magnitude. Okay, they currently have cash and cash equivalents of 30 crores. Okay, they are not equipped for this. So they will need to generate more and more revenues, need to generate more and more cash flow from operations to actually do this. That was Australian Premium Solar India Limited. Let's see how the company does if it actually executes what it plans. And will it be the next Indian solar stock? What is my recommendation? I have no recommendation. The investment choice is yours.